Raj, hi, good to have you with us. How have you been?
I'm very good. How are you today? Good morning.
Good morning. I'm doing very well, Raj. Good to have you with us. I was looking forward to this discussion, largely because with DollarBull, you're now building in a way, a market access for Indian investors to be looking at global equities, right? Predominantly, I think developed market is essentially what you're kind of focusing on. US being one of the largest and the most exciting markets, right? I think the transition has been absolutely phenomenal, and we've been seeing some spectacular numbers from that in those markets, right? And I think as an asset class, because of the liquidity event that we've seen the last 2 years, I think the interest in the appetite has kind of increased and shaped up beautifully, right? We are seeing many other startups in the Indian ecosystem also sort of venturing into that area, right? And offering it as an asset class, as a tool of diversification. I think in that sense, this becomes an exciting conversation. You're purely focusing on doing this. I think would love to know more through the course of the conversation. A lot of mechanics that, for example, go in, right? Now these are homogeneous markets, but very, very complex markets, right? I think India is essentially heading in those, in that direction, right? And especially in the last 2 years, because there's a certain sense of homogeneity which has come in. I think there's a lot to learn, in the process as we go along, right? But before we do all of that, Raj, it'll be great to have a quick round of an introduction and we dive into our session where we discuss DollarBull from there on.
No, thank you so much for kicking off the meeting, Ashu. Just a little bit about myself. I've been in and around the finance space for around 5 to 6 years. I have an overall experience of around 10 years. I started with real estate, which was my dad's family business. And then I quickly realized that what we're doing there in real estate is not something for me. I wanted to venture out. At the heart of it, I always wanted to be into digital because I knew that's where the next wave of growth is going to come and innovation is going to come. So I got into a management trainee position at Yes Bank early on in my career, where I was looking at a digital project there, which was interestingly a chatbot only digital bank. So we created a prototype for a chatbot only digital bank, and we showcased it to the top management at Yes Bank. It liked it, and it's still going on actually as we speak, and it was it was a highly visionary project when we started it, and it's gained speed from there. But after a few years, while I was working on that project, I wanted to also pursue further education. And that's why I got into Indian School of Business. At Indian School of Business, I learned quite a few things. And one thing that I wanted to explore and add to my artillery was finance and asset management, right? So I focused on that because I'd already seen the digital side of the finance industry and the fintech side of the finance industry. And I wanted to look more into the business side of it. And that's where I got placed with HDFC Bank as a private banker. It was a very interesting time. I served for a very short period there, but I learned a lot. What I really learned is that as my customers, right, I used to have customers, some of them were HNIs, some of them were slightly emerging retail customers. They were not all HNIs. And what I realized was that technically what I'm doing is I'm just selling them 3 products, right? One product that I'm selling is mutual funds, right? In which I don't make any money anymore because the margins have compressed significantly for me as a seller or as a distributor. I used to sell some PMSs, which were only 50 lakh and plus, but also again focused on India market. And the third thing which I used to sell most aggressively, which everybody unfortunately still sells most aggressively, is insurance products, which don't make sense for the customer at all, right? So it became very frustrating for us, as relationship managers, as wealth advisors, as financial planners, to really create value or really create some differentiation in the market for our customers. And also when I looked out for opportunities for myself to invest, because now I've started gaining some surplus, right? I've made some good salaries, I've got some income in. Now I'm looking at a good surplus and I'm looking at deploying it into the market. What options did I have? I did not have much, right? And that's where, I said, let me step out of this and let me get into something which is more interesting or innovative. And at that point in time, I did get with another company called Zyphon Funds, which is now called Liquid Market Access because it's owned by a billionaire from New York now. This particular company is very interesting because this company is focused on cross-border investment. So either it brings money from US to India, or it takes money outside India to the US. So that's what this company has been focused on. It has a GSEC bond ETF out of Mauritius, and as we speak, they are currently setting up a fund out of US in partnership with IDFC AMC. So while I was there for a very short period here as well, from 2020, I understood that how big the world is and how big the market is.
Sure.
And at that point in time, I got connected with my co-founder Sahil Sachdev, who was from MIT. He was into the blockchain technology. He was in growth and innovation. He was in the right flow when the technology revolution happened, right? So and he had a couple of startups before this. He used to work with. He had his own startup which he co-founded some time back, which was into Bitcoin, and it was into crypto, right? So he had some understanding in that space. He understood fintech very well. When we joined hands together, what we realized is that what can we do for the Indian customer or the Indian investor to really revolutionize the space, right? A lot of things came to our head. We said, hey, listen, let's do some Bitcoin and let's start with that, or let's get some private investing and let's start with that. But then while we were doing all this, what we really nailed down on and we pointed out is that, first thing that an Indian investor needs to do is he needs to have simple access of diversification into listed public markets outside of India. Right. One statistic that staggered us was that US market make up for 55% of the world's market cap, whereas Indian market cap makes up for only 3%. Essentially, India market is almost only as big as Apple, right? One other statistic that really staggered us was that right now, 2020, close to $40 billion leaves the country every year only for education. This is likely to go up to $80 billion per year by 2024.
Right.
$80 billion is likely to go outside from India to any other foreign location only for education. And taking education as a benchmark, this money is anyways going out of the country. So it's an expense for this country. It's expense for its people. It's expense for the emerging individuals, because today it's not a ultra HNI dream to send their kid abroad to study.
Interesting.
Right?
Yeah.
A guy sitting in Chennai is wanting to. He might do a 9 to 5 job. He might be a mid-level management position, but he's saying, "Meri bitiya jayegi US padhne."
Right.
Because they don't get admission here. There's not there. So that's become a great thing. And that's just one aspect of it, right? There are multiple aspects. I'm giving you just one aspect of it. One interesting other statistic, because we were on the education piece, was what we realized was in the last decade, right, the cost of an average MBA in the US grew 25% in dollar terms, right? 25% in dollar terms, but it grew 100% in rupee terms. So if something is growing 4 times as in rupee terms, that means that there is some misalignment somewhere. What we ultimately saw was that Indians are not efficiently allocating their wealth. They're not diversificating it down.
Very interesting. Right?
They should, because our aspirations are global. Our spends are going to be global. Then why are we only focused on one market in the world? Should we not hedge currency risk? Should we not hedge India risk? Should we not hedge a little bit of risk and plan for our goals in the future? Right? And we started DollarBull. Yeah, and we started DollarBull with this one singular thought, that how we can democratize investing in this country so that people can allocate for their goals. Right now, we are transitioning slowly into goal-based investing. Right, we've not yet thought of it so much, but slowly we are going to transition into goal-based investing. कि तुम लोग invest किसके लिए कर रहे हो? There has to be some ambition, some goal, something you're looking forward to. And the numbers itself add up very well. In fact, you see a lot of people today who anyways say that, it makes sense that for any individual here to allocate at least 10 to 15% of their wealth outside of India. Right? And yes, so that's where we are. That's how we started.
Interesting.
And we grew from there. We built one brick at a time. We put it in. We had a lot of brainstorming. We built it, but we had a singular focus. So that's why
very interesting.
We think we have a very good platform.
Super. Raj, typically what happens is when you're listening about, or when you know that there's a founder, there's a startup, right, which is solving for say for example global market access, right? Now the one thing that sort of automatically naturally comes to you is that the primary segment that they're going to be catering to is going to be that of HNIs, ultra HNIs, right? Family offices, but to a large extent, right? Now, what I particularly like about how you put it together, right? Saying that, listen, I am now weaving in the goal-based investing play, right? Because there is a very large set of people who have an aspiration of sending their kids abroad, right? Or vacation or so on and so forth, right? Now, this becomes not just, say, for example, a tool to, say, for example, help them with longer-term investing and value creation, right? This could also weave into their goals, right? And kind of in a way, be a very significant hedge, right? Tomorrow, whatever movements happen, they can sort of, kind of cover it up with such investing in as part of the portfolio. Now, that's phenomenal, right? To me, that's a very, very large market. And I think India has gotten to a point with, I think, easy financing now. I think the aspiration of sending kids abroad is kind of growing, right? And this makes perfect sense as far as that is concerned. Raj, now, I would want to take a step back, right? Now, I come from an investing ecosystem. I've looked at, secondary market investing. I've looked at primary market investing. Now, when you do that, right? Now, personalization becomes very, very important, right? I've had an opportunity of discussing this with many, many founders, right? In this age where the dynamics, the consumption dynamics are just so much more, right? The assets, the performance of assets is not necessarily, we're not getting any simpler by the way, right? The business are going to be having a lot more dynamics, right? The consumer behavior is going to be changing a lot, right? Which essentially means that the stocks that you're going on and buying, right? Or you're taking that bet and punt on, right? Might not necessarily behave the way you would want it to, right? Now, in an environment like the one you are providing, which is not that type of global investing, right? That risk becomes all the more thicker. That's largely because a consumer sitting in India, I mean, there's certain logic also that goes with investing, right? Because you're seeing a lot of things moving around you, there's observations and so forth, right? And when you're doing foreign market investing, there is nothing of that sort that can exist, right? You'll purely be dependent on the advisor. That becomes one problem in the process, right? The second problem in the process becomes that, a large part of, for example, say you sitting in India selling this as a concept, as a product to Indians, right? All of your cost of operations essentially are calibrated for an environment like this, right? How do you ensure that you provide that consistency and tracking of assets that are there so that there is no miss whatsoever? Are you doing some sort of, is there some sort of visualization which has happened? You built, for example, algos where you're tracking some basic parameters in terms of how the performance, for example, happening? Are you doing technical indicators? What's happening on that front? I'd love to understand. Or are you packaging it as say a mutual fund, right? So where you assess somebody profile and then you're doing mixing matching, saying that, large cap X amount, mid caps Y amount in those markets. How is all of this coming together? So like a bunch of questions, but I would love you to answer each one.
No, I love this question because that's exactly what we were thinking. And we try to simplify the problem a little bit more, right? Sure. And to put that question in one line, that okay, I'm giving free access. You have zero trading. You can invest in any stock and ETF absolutely free. There's no money involved. But that still, puts one question, actually 2 or 3 questions in the head of the customers. Number one question is, where do I invest? How often do I rebalance my investments, right? And how do I track my investments? And how do I know I'm on the right path? Because unfortunately today, right, as we saw it and as we did our research, we realized that not only the investors don't understand global markets, even the advisors to a great extent today don't understand the global market. Unless you're running a family office, the guys who are running around, and who are IFAs or who are mutual fund distributors, they don't really have the flavor of international investing yet, right? So we really need to focus and solve on the problem where to invest and how to invest, right? And that's why we went with one of the simplest solutions we could. What we are doing as an immediate next step, and which is going to be the core business focus for the next coming 3-4 years, is something called modeled portfolios, right? You would have heard of these model portfolios. Sure. Some of our competition is already doing model portfolios, but we are trying to do it a little bit more differently. We are looking at model portfolios not only as a trading algorithm, but also as a place which creates credibility and trust where you put your money, right? Sure. Today, why does so much money flow into HDFC Asset Management Company, right? Why does so much money flow into ICICI? Sure. Only because they have the credit, they have the trust factor, they have the backing. Because people can trust them, people have that ability that, okay, these companies are some companies that, I can work with, or these companies are the right people to manage my money, right? So credibility and long standing is very important, which cannot be built just by technology or just by algorithms. Yes, you can back test it and show high level of returns, but that's not going to suffice today.
Right.
I can back test a lot of things with algorithms and show very good returns and say, oh, this will give you so much. It's fancy, but I don't know how long standing it is, right? So we are very focused, right? We are very focused on putting the best global partnerships in place to create the best investment strategies focused on Indian investors. Now, let me put these things into perspective. And this is something that not many people have thought of, right? So first of all, when we set up our business, what we thought of was that let us do one thing. Let us not look at any startups in the US to partner with or broker dealers. We do not want to work with people who do not have a long track record. So we went and partnered with the Monex Group from Japan, which is the pioneer in the discount broking space. It is one of the largest and the best discount brokers in the world, right? They have their offices in 26 countries. They serve more than 100 countries and they open accounts in more than 100 countries. So we partnered with Monex Group. We have one of the best. Every account we open comes with an insurance of $25 million, which is also good, something very important to me. So what we did there is we created a partner, or we are working with a partner who has such solid footings in the industry already that it automatically creates trust and it automatically creates long liability and long reliability, right? Why this is important? Why this is very important is because what will you do if that player runs by tomorrow? You don't know. You can't you can't work with fly-by-night players in this industry. You have to work with the best. Similarly, what we did in the trading space, where we start giving access free of cost, what we are doing now is we are very heavily focused on working with the best asset management companies and investment advisors who have a long record, right? So we are talking to the likes of BlackRock, we're talking to the likes of Wisdom Tree, we're talking to the likes of great investment advisors and academia focused guys like Dr. Christopher Gegzi, who's a director at Wharton for the last 25 years. And why are we doing this? We are doing this purely so that we can make sure that we create only the best investment strategies which are built and managed by only the best in the industry who we have a long-standing record with. Right? So that's our focus. What we are doing is we are very clear. We are a platform provider. We are a technology provider. We'll build the technology. We'll bring tracking tools. We'll build all of that. But when it comes to money management, we are going to be very, very clear that the money is going to be managed by the best of the best in the world. Not just India, but the world. And that's how we're putting this entire strategy together. Some of the other elements that you would be interesting to you is that from a tracking perspective, when it comes, we've built high level of tracking capability into our systems. So technical analysis, stock analysis, how it's moving, etc., can all be readily available. What technology can provide, right? So whatever information a technology can provide to a savvy investor, our platform will provide to the savvy investor, whether it's for a stock or a ETF. However, if somebody wants managed products where somebody wants somebody else to manage the product for the customer, we're building that, and that's going to be one of our core features of the business.
Interesting. Now, Raj, there is a very I think love how you've kind of broken it down, right? So essentially, what I gauge from what you're saying is that this is a fund of funds sort of an approach that you're kind of taking, right? By partnering with local players, right? And I think your kind of idea is to sort of leverage whatever they've established, right? The entire infrastructure that they've established, right? And the understanding that they've established in the market, right? Now that's spectacular, right? At many levels. I would want to talk a little about competition, right? Now, US-based investing or US-focused investing is not something which is unique to. There are a bunch of players who are kind of offering some of this, right? There are some slightly more holistic platforms that have actually come in, right? So they started with Indian equities, they started with mutual funds, they started with personalization, right? And last couple of years, and they've grown phenomenally at the AUM level, right? And that's also because of DIY culture which has come in, right? Now these are also platforms which have now started to empower investment in global equities, right? US predominantly, right? Where you can go and buy stocks and so on and so forth, right? They've actually also broken down the costs at many levels, right? And which is essentially what the democratization factor now comes. In an event like that, right? When there's a player which has a deeper understanding of me as an individual, as an investor, my risks, right? My consumption habits, so on and so forth, is predominantly in a better position to, help me understand and gauge the kind of output that I can have, right? How do you see that? Because, what you're possibly offering is a very singular solution. Like say, and the thought process possibly the assumption is that I'm already motivated to be invested, right? And I have dozens of avenues, right? And you possibly providing a more credible avenue, right? Competition is really beat up last couple of years, right? And like I said, we've seen phenomenal traction in these 2.5 years. How do you see that, right? Does that make it more competitive for you? How are you sort of tackling it on the cost front? I'd love to understand all that.
No, very good question, and I'm glad you brought it up because this actually dives a little bit deeper into our business model, which is how are we going to channelize AUM into our business? How are we actually going to get customers in? Sure. You're absolutely right that some of the larger players with millions and millions of dollars in funding are going to have higher spending capability and a better understanding because they are a higher level manager of the customers, and it's going to take us some time to build that, which we completely understand and we value that fact. So we have a very unique business model, and our business model is not D2C at the moment. It is D2C to some extent because we have a website which is on. Our pure focus is a distribution driven business model, right? What we are doing is we are pitching ourselves as any other asset management company in this country, but focusing on best of the world strategies and not India strategies. and we are going to all the wealth managers,
Very
independent
nice.
financial advisors, and
Right.
large institutions, and saying that, hey, listen, I've created this platform. You can do all your due diligence you want to, because we've only worked with the best in the world, right?
Sure.
Your customers get insurance, your customers get free access. We are also creating these investment models or investment strategies which are headache free for your customers and for you,
Sure.
because they're professionally managed, and we will also pass back fees to you.
Sure.
Right? So it's a win-win for you. And for
Interesting.
that, what we have done is, so we took care of is not at a business level, but also at a product level, right? So what have we done today is we've created a 5-tier structure, right? This 5-tier structure helps us create something which is, at any point in time, there is a super admin layer, there is an admin layer, there is a partner layer, there's a relationship manager layer, there's a customer layer, right? So when I've created these 5 layers, I can just scale it up, and I can say that, hey, listen, you want I've created a partner dashboard for you, or I've created a partner login for you. Through this partner login, you can add relationship managers, manage your relationship managers, and manage their customers, and their relationship managers can start managing their customers. So this entire infrastructure that I've created at a product level essentially not only solves the problem for giving access to global investing, but also solves the problem of how to manage the customers and the relationship managers while they're giving access to global investing through their platform, right? And we can white label this, we can provide APIs for this. Basically, it's a one-stop solution for any IFA or a wealth advisor or a stock broker or a mutual fund distributor to provide their customers access to global investing. Because we've created the entire architecture, not only from a business standpoint, but also from a product standpoint, that take care of everything. They can take care of, they can track what business they've got, what are the AUMs under management, which relationship managers are doing well, which are the biggest customers, how much money is flowing in, how much incentive they're getting from each customer, etc., etc. So all these things have been built into the product, and that's where we think is where we could compete, right? The question was, would we like to compete in the D2C space? We would absolutely love to. But are we in a position today to compete on that space? I don't think so.
Right.
So why don't we go where we have our most expertise, right? And luckily for us, my mentors and my head of distribution and some of the people who are working with us come with close to 80 years of experience only in the distribution space and in asset management in India. So we that's the model that we thought of, and that's how we tackle that issue.
Right. So Raj, now I have a bunch of questions, right? I mean, while of course you kind of simplifying distribution for yourself, the way I look at it is that there's an added layer of complexity which is now coming in, right? Now, Raj in his capacity at his team level, right, which is very calibrated, right? You can really pick and choose people depending on their understanding, right? And you can really sort of construct like a formidable layer, right, of people who understand this market, right? Now, as soon as you tell me that you are sort of empowering these, it's a B2B2C, right, where you are essentially partnering with these IFAs, and this becomes another product. Saying, so if I'm, for example, an IFA, I can go to my clients and customers and tell them, listen, now I can offer you global equities as well, right? Problem there, Raj, is that the IFA ecosystem that has been built in India, right, or any distribution ecosystem that has largely been built in India, even banking infrastructure for that matter, is largely all relationship driven, right? And that's the unfortunate part of it, right? We still don't have a lot of CFAs, we still don't have a lot of people who understand the dynamics of a business, right? It's a job which is more of consistency than of intelligence, right? There's just about very, very few people that you really come across who can understand the economic, for example, say movement, right? The macro movements that are happening. Do you think in an environment like that, when you're playing that role where you are now doing a B2B2C, there could be a problem that a lot of this gets missold in the market? That's been an issue all throughout, right? Because these are IFAs or these are distribution channels that have a certain access, and because of the revenue being low on other assets, right, and this could potentially be slightly higher, there's a huge possibility of mis-selling that could happen, right? How do you control that? I mean, is that a concern for you right now? I'd really like you to sort of throw some light on that particular bit.
So first of all, let us be very clear. What we've done is there are 2 levels. See, the best we can do in such a situation is go through a lot of educational initiatives, not only for the investor but also for the advisor, right? So we're heavily focused on the education piece of it, advisor education as we call it, and investor education that feeds through the advisor to the investor, right? So that's one focus area which tries to solve this issue, because that really puts the point that who should be looking at global investing and what part of the wealth should be looking at global investing. Okay, we have never come out and said that you have to go and aggressively sell this like an insurance product in the market. We're not saying that. That's one point. The second point being, we are going to benchmark our costing and our entire model to international mutual funds which are already readily available in the market, right? So we benchmarked ourselves to them, correct? So we're not going to go out there and say that, hey, listen, you're going to make 5% on this product, sell this product. We're not going to do that, right? We are purposely not doing that, because what that ultimately does, it does two things. One, like you said, it'll lead to mis-selling. Second, what it would lead to, it will lead to eating up into my returns. Ultimately, if it eats into my customer returns, my product looks bad. And I don't want that. I want my product to be standing and sustainable. I don't want it to eat into my returns, right? So we're very conscious about what kind of revenue sharing we are doing, what kind of passing back that we are doing, and what kind of educational initiatives that we are passing, correct? Because for us, a significant amount of time early on, so I'll give you some understanding, because we've done a lot of calls over the last 3 months with a lot of IFAs around the country. We've spoken to people in Kolkata, we've spoken to people in Gujarat, we've spoken to people in Delhi, we've spoken to people in South, and we've spoken to people in Mumbai and Maharashtra, right? All of them come with a different mindset, but you will really be surprised of the level of understanding that has grown into them over the last couple of years, and the quality of questions that we've got. We were super happy about it. They asked us some really in-depth questions about this, about that. They said that, okay, I have my own money. What about this? What about this kind of taxation? How will my customer suffer here? What will happen this? What will happen that? And when that kind of probing came in, that question that you just raised of mis-selling, yes, it just happened. But, we are slightly underestimating the quality that has grown, because these guys have been part of forums. There are so many forums today, right? There are so many webinars. That's what COVID did. There were so many webinars going out to these distributors on a regular basis, which upskilled them to a great extent. So yes, while they're still relationship based, they still have to be competitive, because others around them are learning a lot more, right? So the quest is there to learn even a bit amongst the advisors, and I think that's going to take care of itself over a period of time, where people will have to upskill themselves. In the meantime, what's the best we can do is, one, keep the costing in favor to the customer, benchmark it to existing standards that are there in the market, and to do as much as investor education and advisor education as we can.
Very interesting. Raj, you've actually walked into my next question, right? Which is that on costing. Now, costing it's an important part, right? Eventually, in India, for example, the regulators come in very, very heavily, and they try to sort of control cost, right? And that's largely to avoid mis-selling. When you talk about financial equities, right, or when you talk about investment avenues, how's the costing piece playing out, right? What are the kind of, what's the cost per million that you, for example, looking at from a deployment standpoint, from a distribution standpoint? If you give a breakdown, that'll be really helpful. And the second question, a subset of this, right? In your run, what are kind of AUMs that you're handling, right? In this B2B2C sort of the relationship and then distribution track that you've built, what are the AUMs that you've got to do, right? I'm assuming that you're actually in your first sort of an outreach, in the first phase of growth, you're actually dealing with the intelligent ones, right? Because they create a lot of resonance in the market, right? A very positive sort of vibe, and then there's automatically a lot of content that gets generated. There are certain practices that get established in the process, right? Would love to understand that, and how many distributors today are aligned with you when you're going out and building those depths and advocating for the cause that you have set this out with. Would love to understand that.
So I think there are two questions. Number is where we are as a business on the B2B front, and that was the second question. And the first question is more towards what's the costing like, right? So I'll give you some idea. Costing so we are a platform which is live today. We have stocks and ETFs which are live on our platform. So from where we are today, there is no account opening fee, there is no account management fee, there is no trading fee, there is no trading commission. There's absolutely no fee. In fact, for every account that is opened and funded with a minimum of $2,000, we are giving a $25 reward into the account of the customer only. And this is not a limited period thing. This is something that we are looking to continue. This is to reimburse the customer for international transaction costs, because for sending people money from India to the US, it comes with certain level of cost, right? So to cover for that cost, not only are we charging any money, but we are also paying them $25. So it's a absolutely end-to-end zero cost platform That also gives you the $25 reward in terms of transactions, right? There is nothing that we as a DollarBull charge to the customer. That's one thing to remember. The banks will of course charge for an international remittance and reverse remittance, but that's not something we participate in. That's the first thing to understand. The second thing is we give a complimentary insurance of $25 million, which I covered earlier, on every single account, right? So that becomes a huge thing. You don't want a Kavi-like situation in India again, right? Like, what will you do? What will the Indian investors do if their money, for whatever reason, from not only their investing assets, but they could be cash lying on their investing account in the US, right? So what happens if there's breach or there's some kind of an issue? That insurance will really come into picture at that point. So that is how it's currently priced. In terms of what we are creating in a model portfolio, yes, it will come with a small fee, which is an annual fee. And that annual fee, we are looking to benchmark it to the international mutual funds which are currently available in the market, right? So technically, trading is free, investing is free, everything on the platform is free. On top of it, you get additional benefits. And if you're looking to invest into some of our managed products, just like a mutual fund in India, you pay an expense ratio. You'll pay a similar expense ratio there. It's not going to be, very, 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 very out of what is normally there. Because then again, like I said, it'll eat into the return. And we don't want to focus on that. We want to focus on giving good returns to the end customer. So that's how the entire costing piece is pieced. In terms of what our AUMs are currently, so just a disclaimer, we've recently launched, just after Holi this year, right? And we started our distribution activities in maybe Feb and March, and we were looking to scale it up. So we really started in April. Currently, we have a distribution pipeline of 70 plus IFAs, plus large players, plus mid players. We've spoken to, I'll be very honest with you, we've spoken to people right at the very top and right at the very thing. The people which we have spoken to are right at the very top. Of course, cannot disclose names at the moment, but those will take at least 30, 60, 90 days to close the contracts and to get those things up and do the white labeling and do the API integration. So we're working towards that. In a smaller space, what we've started recently doing is that we started giving out partner codes to people of lately. But because we do not have our model portfolio offerings up yet, because that's still under the works, we just have the investing work, right? Most of the people that we're working with are still waiting for that model portfolio offering to come up, which we expect somewhere in June or between June to July, right? So that's where the AUMs will really come into picture, because right now what we really have is direct investing platform. So it's not as aggressively, started marketing. What we are focusing on is to build as big a pipeline as possible, get as many people in as possible, train them, educate them, show them the portfolio, start pitching the portfolios, do a build up for that. It's more like a wait list of a different sort, where you warm up the market, where you show the product to the market, you take it out, and then when at the time of the launch, you do a large scale, AUM collection kind of a drive. Right. At the moment, we do have a few crores sitting in direct equities, but this money actually comes in from some of the HNI investors and some normal investors who are looking at a particular stock or a ETF. Right. So we have some investors who come to us, say that we want to put some money in Meta because you're a zero cost platform. I'll put a crore in Meta, or I'll put a crore elsewhere. So we have some customers on those lines. From a distribution standpoint, we have not really built an AUM because we don't have model portfolios yet. So we are fairly new to the trade as on date.
Interesting. Raj, is it a fair understanding, right, that you're in an early phase, right? And I think it just becomes so much more important to give out these freebies, right, so that people can experience it. Or do you think this is something which is going to be, will continue to be part of what you're going to largely offer, right? And I ask you that because sustainability becomes very, very important, right? Financial services in general, not just in India but globally, is a very thin layer. Or a marginal business, right? The other problem is that, for example, which are the creative aspects of it, right? The regulator comes in and very clearly defines, what kind of an offtake can you have. It's all very, very regulated, right? From a communication standpoint, who can you sort of partner with, how many people can you get, how can you price, so on and so forth, right? It is very challenging, right? So is this like an AUM game that becomes, the idea is to sort of build an AUM, which is not a bad strategy, right? And eventually sort of exit to somebody who this could become, an additional layer of product too, right? And possibly has the other infrastructure which becomes like, that added on game in the process, right? Or is the idea to become a full stack player, right? Where you say, for example, started with equities in one markets, right? We eventually sort of grew into doing a bunch of other asset classes like Bitcoin and a bunch of other things, right? And the developed markets are slightly more organized on that front. Is that the idea? It's also a 2-year question of sorts, right? In a way, you can choose to answer it the way you'd like to.
So my simple answer is yes, we have very high ambitions, and we would like to follow the latter, where we already have a roadmap and a wish list of products that we want to add, and we already have demand for some of those products, right? For example, products like non-listed securities, right? We're seeing private markets are something which some people in India are very, very interested in, and we have a massive access of private markets already. It's just that we've chosen not to do it as our first step. Bitcoin and crypto, it's one of our core competencies, because my co-founder has been around that space for almost forever, and he understands that very well. So it's a natural next step to bring these into our offering right now. Yes, there are some challenges and we need to work through them, and that's what we are looking. But for now, what we have is we have this 3-year vision of what are the different offerings we want to give, but we have a very solid 3-month plan, right? Depending on where we are in the next 3 to 6 months, we will decide really when we want to pick up those other things, if or not we want to pick up those other things, right? Today, I don't want to look too far ahead from where I am, right? Because then I will miss what I have to do today. I'm very focused today on setting up what I have to set up. If I've set it up correctly, once we do that, automatically these things will flow in as next step. And you're very right that we are in the AUM game. We are not in the transactional game, as you say. We're not looking to become a player that's going to be charging per transaction, or that's not something we aspire to be at the moment. At the moment, what the focus is to build as much AUM as possible, because we are looking at investors and not traders. So if you're looking at investors, why would you look at trading? You should always look at AUM.
Makes sense. I think makes sense, right? And I think it's also a reflection of how you are, for example, thinking about your business, right? It's about your priorities. It's about your capitalization as well, right? As a company, and how far can you go, right? Because I think you got a point. It becomes a game of capitalization, especially when you're playing an AUM game, right? The cost of resources is going up, the cost of intelligence is going up, the cost of tech, for example, is going up, right? And I think capital, for example, how you're backed becomes important in the process. And I think that's essentially what everybody in the ecosystem kind of leverage it, right? Even players who created marketplaces, right? And I think that, of course, going out and creating a lot of, marketing pull, right, is very critical in that, right? Now, Raj, towards the end of a conversation, right? But I think this conversation cannot, or I think no conversation today can be complete, especially when it's fintech, right? And especially when it's investment, without talking about government regulations. Now, government regulations is something that is very clear in certain parts and not so clear in some of the parts, right? What's the status on global investing? We of course have certain regulations, right, in terms of what you can do and what you can't do. What's your sense of it, right? Is this something which is done to be incentivizing Indian investors, or there could be a better version of, say, some of these regulations that are out there?
See, the regulations can definitely get better, and they are slowly getting better. We are getting some new access points. If you recently saw, there is the gift city, right, through which access can be provided in a much more efficient way. So government is working towards it. My view is that the more liberal it becomes, the better it is for everybody. But the government has its own challenges. So we have to work with whatever they say. So if they say you can't do crypto through the LRS, we will not do crypto through the LRS, right? Because they will have their own points, their own suggestions, and we'll work within the space. And what we've done so far is, rather than commenting and working towards trying to change what the government is doing, which it's already on the trajectory of doing and which will naturally happen, our focus is how we can work within the legal framework in the most airtight way we can, right? That's why we went to the best of the best. So if you see, we work with Raj Gandhi for our legal things, and we work with PwC for our tax structuring and how money flows from India to the US and back, with the distributors and the customers. So we've made a very airtight system for ourselves. I would not like to, push the government towards becoming more liberal. Yes, we would love it, because that would make things a lot more easier, right? Today, one of the biggest problems that we face in this entire journey is basically sending money from India to the US. Everything else is not that challenging, right? And that's only because people don't have the ease. It should be as easy as sending money from one bank account to the other, but it is not, right? It requires there are digital platforms which have come up, but it's still a little tedious. So the customer needs handholding, right? I don't know if you've seen this, but we've seen some of the statistics, and the most amount of fallen customers, or most amount of customers leave after the KYC stage just before the funding stage. And it's not because they don't want to fund the account, because they get so overwhelmed with the entire process, they get scared of it. Right? So all I'm saying is, while it's okay to have all the processes in place, let's make them less scary. Let's work our way around to simplify them. Let's use technology to simplify them. Right? So what we do is, instead of going to the government, we go to the banks. Right? We go to the banks and say, how can you simplify this entire journey for your customer? Let's say your customer wants to send money from India to the US. Yes, there are some things that need to be done, which can be done. It's a simple form. How can you pre-fill some of the information? How can you make it less clicks? How can you make it more easier for them to consume and understand and do the transaction? If these simple operational things are also done, not at a regulation level, but at an operational level, if these things are done, it will help a lot, especially for the emerging guys. For the HNIs, yes, the tax deducted as source beyond 7.5 or 10 lakh rupees, with all that is little bit of an issue. But for the emerging guys, that's not as big an issue. $250,000 is something they're never going to touch. The emerging guys. So the guys we are really targeting are not really getting the pain of these things as much, right? So we're not really focused on how to increase the LRS cap or some of those things. We are just thinking, how can we simplify the entire process? And how can we simplify not only transaction but also taxation?
Very interesting. Raj, towards the end of our conversation, you've answered a 2-year, you've given us a 2-year, horizon. Yeah, how are you kind of prioritizing all of this? Last section typically is more very cliche, right? But it's also very important, right? I think each founder has a very unique journey, right? I use this last question, right? Last section of this session to capture anything that a founder wants to share with the larger audience, right? I think what we're also sort of trying to sort of do now in our small capacity is get the community together, right? Create that culture of learning from each other. I would want you to give out any learning, any takeaway that you would want to share, with the fellow founders, right? And I think advice is, irrespective of who it comes from, advice is advice, right? It could, you never know how it could sort of impact somebody's thought process and thinking process, right? How could possibly ease their way of building what they are, right, and their journeys. So I would want you to sort of give out anything that it's been your learning, right, and you would want to share with the world. I would want this section to be that.
Wow. So the first thing, I'm pretty new. I'm a young entrepreneur. I've been around the space for a little bit over a year now. And one thing that I've really learned is, after burning my hands a little bit here and there, is that number one, get the best mentors you can. I think without having the best mentors, without having the right people to guide you, you're bound to make more mistakes, right?
Sure.
The one thing that you can do for yourself is, rather than discovering things as you go along, which will take a lot longer, work with people who can point you in the right direction. There is no harm in asking for advice and guidance, right? And we've done that well. That's why we've succeeded well. So if you see, we've been working with the likes of Dr. Feng Zhu from Harvard and Dr. Christopher Gegzi from Wharton, and Mr. Bharat Puri, who's been giving us some guidance here and there from Pidilite. So we've been working with these really good mentors who've been helping and guiding us. That's very important for a young entrepreneur like me. Second is, be out there more and be inside less. What I mean by that is that you as a founder might think that there are 3 or 4 things you should be doing which the customers want, or which your people outside want. But the reality in many times is quite different, right? And the only way you can know that is by testing more. So the more you test, the more you go out there, the more you talk to people, the better it will be, right?
Super.
And the last piece of advice that I would like to give everyone is that while you have a 2-year, 3-year focus and you want to get somewhere, what really matters is the next 1 week, 1 month, and the next 3 months.
Interesting.
Right? If you can't have an hyper-focused approach and not achieve what you want to do this week, and what you want to do this month, and what you want to do this quarter, you're definitely not going to achieve what you want to do in the next 3 years. It's very easy to have very long dreams, but it's very important.
Interesting. I like that focus. I think that focus is very important, especially in a market like India, right, which operates at many. There are a lot of local complexity, right? I think it's so much more important, right? Irrespective of you being a homogeneous product, right? Irrespective of you being how relevant, right?
Absolutely.
The people who are going to be eventually consuming it, right? But I think this is a good and an important takeaway, right? Thank you so much, Raj, for doing it. Pleasure to have you with us. Look forward to having you with us much sooner. We wish you all the very best in your journey. I think you've picked up a very interesting task for yourself, right, with DollarBull. And our sense is, at the outset of the conversation, I think one point which particularly kind of stayed with me, right, is when you have an aspiration, which is, for example, say global, right, where you want to sell out your kids or anything of that sort, right, expand your business. I think it just becomes so much more important that you start investing in such assets, right, which will just beautifully hedge your, any movements that happen whatsoever, right? And I think that's just such a pertinent point. That also is a reflection of how sharply you are looking at, for example, your ready audience base, right? For a lot of people, I mean, India, like I said, right, a lot of people are new to investing. This might not necessarily be like that product straight up, right? They'll of course need a lot more maturity. But I think for a lot of people who are there from at least a consumption standpoint, have some understanding of investing, have that aspiration. I think this is going to stand very, very right for them and very, like I said, pertinent and important for them in that process, right? Raj, thank you so much for doing this. It was a pleasure to have you with us. Look to have you, like I said, right, join us much sooner and doing, this again, where we talk of, how things have shaped up, how things have matured. And I think we couldn't do a lot of this today in this session, right? We couldn't discuss the consumer, absorption and the intricacies that happen on that line, as in that zone. But I think we're going to cover some of that in our next conversation, right? I think it's just so much more important to understand that perspective. I think the investor-consumer concerns are very, very critical priority, right? And we are a country which has, like I said, very low base when it comes to understanding investing instruments, right? I think that's possibly something that I would want to pick up in the next conversation. Raj, thank you so much for doing this. It was a pleasure to have you with us. Look to have you much sooner. Thank you.
Thank you. Thank you so much. Thank you, Ashu.